SCHD versus VYM. Two of the most talked about dividend ETFs for 2025. But which one is actually better? If you're investing for long-term income, you want to pay close attention. Because while both ETFs aim to provide dividend growth and value exposure, they take two very different approaches. Welcome to Asset Index, where we help you navigate wealth through data-driven investing. Let's dive in. Part 1 Overview. What are SCHD and VYM? Let's start with the basics. SCHD, the Schwab US Dividend Equity ETF, focuses on high-quality US companies with strong dividend histories. It tracks the Dow Jones US Dividend 100 Index. VYM, the Vanguard High Dividend Yield ETF, casts a wider net. It tracks the FTSE High Dividend Yield Index, targeting stocks forecasted to pay above average dividends. Both are passive index funds. Both offer low fees. But they have very different stock selections, weightings, and sector exposures. Part 2 Performance Comparison. Let's talk returns. Over the past 10 years, SCHD has returned around 12% annually. VYM has returned closer to 10%. That 2% gap might not seem like much, but over time it's huge. On a $10,000 investment over 10 years, SCHD grows to over $31,000, VYM grows to around $26,000. That's the power of performance compounding. But why the difference? SCHD tends to lean more into growth at a reasonable price stocks, while VYM favors more conservative, value-oriented holdings. Part 3 Dividend Yield and Growth. Now let's compare income, both current yield and growth. As of 2025, VYM has a higher dividend yield, around 3.5%. SCHD sits closer to 3.2%. So on the surface, VYM gives you more cash flow today. But dividend growth tells a different story. Over the last 5 years, SCHD has averaged 10 to 12% annual dividend growth. VYM has averaged closer to 6 to 7%. That means if you're reinvesting dividends, or thinking long-term, SCHD may deliver more income down the road. Part 4 Holdings Breakdown. Let's open the hood. SCHD's top holdings include Broadcom, Texas Instruments, Pepsi, Verizon, Coca-Cola. VYM's top holdings include JP Morgan Chase, ExxonMobil, Johnson & Johnson, Procter & Gamble. Chevron. See the difference? SCHD has more tech, consumer goods, and dividend growers. VYM leans toward financials and energy. That's why they behave differently in different markets. Part 5 Volatility and Risk. What about volatility? SCHD tends to be a little more volatile because it leans into growth stocks. But historically, it has rewarded that risk with higher returns. VYM is slightly more conservative and defensive. It holds more established, dividend-paying blue chips. So if you're ultra-risk averse, VYM might be a bit easier to stomach during downturns. Part 6 Fees and tax efficiency. Fees are crucial. SCHD has a 0.06% expense ratio. VYM has a 0.06% expense ratio. So we can call it a tie there. Tax-wise, both are fairly efficient, but SCHD's more concentrated portfolio can sometimes trigger capital gains. If you're in a taxable account, both are solid, but SCHD may produce slightly more taxable events depending on rebalancing. Part 7 Which one is right for you? So, which should you pick? Choose SCHD if you want higher historical performance, stronger dividend growth, more exposure to quality tech and industrials. Choose VYM if you want higher starting yield, broader diversification, more defensive, value-style investing, and yes, some investors choose to hold both. They complement each other well. Part 8 Final thoughts. At the end of the day, both SCHD and VYM are excellent choices for long-term dividend investors. SCHD is like a growth-oriented dividend machine. VYM is more like a steady, defensive cash flow generator. If you're in your wealth-building phase and looking for performance and growth, SCHD may offer a better path. If you're nearing retirement and want dependable income, VYM could be a great choice. Or, use both to balance your portfolio. Thanks for watching Asset Index. Subscribe for more dividend ETF breakdowns and investing strategies.